there is like a lot of like restructuring of the tech stack and how like AI is kind of redefining all parts of the investment firm build. So yeah, I think 2030 looks a lot different 5 years from now. I think the smart managers are starting to implement that now, like into their processes. They're starting to turn into super investors. Yeah, I think the world will look very different. There will definitely be emerging managers. I think the world will look very different in terms of like the technology and the data they're able to access to make investment decisions faster.
At Context Ventures, our podcast, Advancing VC, covers all things startup and venture capital, primarily how startups and venture capital are changing from the emerging manager perspective. We chat with venture capitalists, limited partners, and founders who are actively working at the frontiers of our industry and are advancing venture capital. Today, we have a very special guest, Winter Mead from Coolwater Capital. Winter Mead is especially suited to talk about how venture capital is changing because he constantly talks to limited partners and emerging managers. Winter, thank you for joining us.
Thanks, Tim, for having me on.
Winter, can you please share your journey from inception to Coolwater Capital?
Absolutely. So I think at the beginning, it was a little bit of luck. I got an offer to join a multifamily office in San Francisco, and that happened to be on the private equity team. So it's kind of thrown into the deep end of the pool in the early days, investing into small funds, fortunately, right? Really understanding what an actual emerging manager looks like. That early journey of ideation, of launch, of building in the early days, fund one, fund two, fund three, as well as the fund fives, fund tens, fund 15s, even sometimes higher. And so I really got this dichotomous perspective of seeing what best in class look like, best in class private equity, best in class venture, but also, that gap between, where you're going to be in 20 or 50 years and where you are today when you're starting out. From there, I went over to help build an investment strategy at a large corporate. And the perspective I think acquired and the skill set I acquired there was continuing to invest into funds as well as evaluate and invest into directs, co-investments, and then also helping build the strategy from scratch. And so it was a more entrepreneurial role where you're building something on an existing platform. But it helped you think from first principles of, okay, if you're building something that is at zero, what do you have to do to just get it off the ground? And then how do you have to iterate and kind of, change and iterate on strategy over time to actually build, again, a best-in-class process, first any process, but then best-in-class process. So I think I started to gain empathy for the emerging manager journey, which is, very highly qualified, highly skilled individuals, highly ambitious, very aligned with limited partners, right? I was kind of starting to gain empathy of, wow, the resources are limited here in this part of the space. The ambition, it hasn't gone away. It's even greater at times, or in cases, maybe even more so than established managers. And so you have these very good alignment of incentives, these very high ambition people, these very highly skilled people, and there wasn't a landing pad for them, right? And so long story short, ended up, leaving to focus on those managers. I wrote my first book during that period. I consulted with 14 different firms, really from a variety of different perspectives, kind of the financial perspective, the operational perspective, the fundraising perspective, not just the investing perspective, which is what I had. I was an investor underwriting funds and investing into companies. And then I wanted to round out that skill set and really understand kind of the holistic view of what it meant to start and build a firm, right? So that I could support, across all dimensions. If you're a coach and you don't really understand how to play the game, how good of a coach are you going to be? And so I think, I spent a few years doing that. And then, being in San Francisco, thinking through, you look around left, right, you go to any coffee shop, everyone's kind of either trying to save the world or take it over. I think, from my perspective, I was like, all right, growth mindset. I'm doing this with 2 or 3 funds fairly well. I'm getting some positive feedback. Instead of 2 to 3, can I change the order of magnitude? Can I support 20 or 30 at a time? And I think that was kind of the shift There were some previous models, right? Accelerators, incubators that have been successful. So, we didn't invent the accelerator model, but we did innovate on it and apply it to funds, right? So you're an entrepreneur still, you're a founder still. You just happen to be building a fund, like a investment firm, that's your company. And so we kind of said like, well, incubators and accelerators have been successful, helping build and craft, companies. Why can't we do the same for the fund space? And that felt like a systematic, scalable way to support emerging managers. That felt more impactful than what I was doing as a consultant. And so I think that was kind of the evolution of what Coolwater is today.
So you've been building Coolwater, according to LinkedIn, for about 3.5 years now.
Since 2016. So the early writings, I was kind of thinking through like, because as an LP, you're getting exposed to all of this information and all these GPs, and you're looking through stuff and you're like, wow, that person's thinking about it so differently. Like, why aren't the rest of the world, of the world's GPs thinking about it this way? And so I think I started to like piece stuff together, started journaling about it. But again, it was that like fear of imposter syndrome of like, okay, I've invested at that point about $1 billion into, private equity and venture. But again, just investing alone, and I think this is kind of something that's missed, investing alone doesn't make you an expert. And I think a lot of LPs miss that. They don't, unless they've built it before, they don't fully appreciate what actually is involved and how hard it is. Investing is a skill set, just like finance is a skill set, just like operations can be a skill set. But like, just because you're an allocator does not make you an expert on what it means to build a firm. I think that's kind of the nuance that I started to get insight into and realize like, wow, I can underwrite this fund, right, and check all the boxes during my institutional underwriting due diligence process. But that's different than trying to position myself strategically as a core partner in the early days to help that manager think through the tough decisions they have to make, where a lot of those decisions are made in a gray area. It's not fully black or white. Some are easy, some are not easy. And so I was like, okay, how do I really understand the nuance behind things and write things where it's like, okay, that's LP friendly, that's GP friendly. Where are we going to meet in the middle? How do I think about LP friendly for this term versus GP friendly for that term, or for whatever business process you're implementing? And there's a lot of things to do. There's easily hundreds of things to check off the list if you're launching a fund. So like, yes, I have that checklist, but it's also like, it's not just going down and checking off the list, right? Because it's fund management, and management is an exercise that takes place over time. It's not just like, oh, build it and, the fund's going to make money for me and my LPs. It's like, no, you've built something and now you have to actively manage it. And you actually have to, like, it's strategy as well. You have to shift over time. You have to actively manage and shift strategy over time so that you're evolving as the market evolves, the fundraising market, the investing market, the financing markets, like all these like different pieces of fund management. Like, you have to evolve and be kind of smart and think through it and make decisions very constantly, right? As an emerging manager. And if you do all of that right, you can still fail. But what we want to do as Coolwater is position you to increase your probability of success. We can't promise outcomes, but we can definitely promise increasing your probability of success if you kind of come through our program. So yeah, 2016 was the inception of when I started iterating on it. 2018 is when I started consulting. 2021 is when we kind of formalized it into this, like, okay, this is the model. We want to help funds and eventually, invest into this ecosystem as well as an LP.
So this is a phrase I've heard before, and I don't know how much you like or dislike it, but Coolwater is the YC for emerging managers. Is that a decent analogy?
I think it's a really good heuristic. I mean, if you have thousands of audience here that's listening, that is the heuristic. Y Combinator for funds. We did pioneer that model, right? But what is that model? There's nuances, right? Because we didn't pioneer the incubator, studio, or accelerator model. But what we did is we said, hey, if you take some of the elements of what an accelerator is and we apply it systematically to helping funds, we think we can move more funds further, faster. And that's what we did. So I think the similarities are, we run a cohort-based program. That's now become multiple programs. Like we actually run over 7 programs, but people know us for our core fund manager program. So we run this cohort program, and we're always recruiting. Like there is no deadline. Like I say, you can't put a deadline on talent. Right? It's like, oh, when's your deadline for? It's like if you're getting involved to like raise a fund, like you're not going anywhere for a while, right? This is like a 10-year commitment. Even if you only invest for 3 or 5 years, like you're gonna have to manage that vehicle for a while. It's probably even longer than that. So I feel like when people are like, oh, like, you know, it's like a month here, 2 months there, like in the grand scheme of like time and perspective, like there is no deadline for people. So it's like, okay, run this cadence of cohort program, try to make it as applicable as possible and adjust it, right? Like YC kind of adjusts to the zeitgeist. So vertical AI is probably like a hot topic, right? Or like application layer AI. So it's like, okay, so where are we in the cycle, or where are we with like themes? And you can see that with emerging managers as well, where you kind of have a traditional spin out from a big fund platform. They might be generalist, right? And kind of talk more generally, but then you go to emerging manager land and you're going to have like these, you know, like highly specialized managers that kind of capture, if you look at them, we saw 2011 funds last year in 2024. If you look at that breadth of funds, you're like, okay, that's interesting. That's a unique theme that's emerging. And you can start to like pick and choose. And, you know, if you're an investor, you can start to think about capital allocation, or, you know, how are some of these emerging themes, are they going to become trends? Are they kind of like take over the industry in a couple of years, right? It's kind of discovering blockchain before blockchain is blockchain, or Gen AI before Gen AI is Gen AI, right? And so I think we're trying to use fund managers as a heuristic for people that are kind of capturing these themes early and really understanding kind of the tech and kind of what the future waves are going to be early, right? And that's similar to YC. And I think YC also has a big event, right, that kind of centralizes a capital network. And so I've tried to be as selfless as possible, where, you know, I'm throwing LPs into this event. And we didn't actually launch with that event. When we launched, that was kind of encouraged by the participants, of course, right? They're very focused on fundraising. But I was like, okay, like what are the pieces you want to actually adopt from a best-in-class organization like YC, and what are the some of the things that you don't need to adopt because we're operating in a different space, right? We're building investment firms, we're not building startup technology companies. And so it did feel though like having this cause to work towards, right? Where it's like, oh, program ends, great, I'm well educated, right? Like who cares? I think it's more like, okay, I'm well educated. How do I implement this, right? How do I instill these as business processes? How do I implement these as business processes? What am I working towards, right? Like what's the forcing function to get better? It's like if you're an athlete, everyone I'm sure has done some form of recreational or you know, competitive sport or something. Like what are you working towards? Like, you know, how are you becoming the best? Like the demo day is like a forcing function to improve your pitch. It's like if you're going to stand up on stage and pitch 200 people, right, you probably don't want to embarrass yourself. So I think like it kind of forced, and then it's like a one-to-many, that we don't really do panels. It's like the whole day is really focused on just like networking. So everyone walks away with like probably a few dozen more, if not like 100 plus more kind of relationships that are very relevant. Everyone that shows up to our events like is very curated, and like they kind of have a point. Like, okay, I write checks into funds. Great, show up to this event. Like that's what we're here to do, is to like help you find people that want to support this early stage ecosystem that isn't still fully supported institutionally, which continues to just baffle me.
You started Coolwater formally in 2021, but you've been working in the LPGP space before that. 2021 was an explosion of emerging managers. Now we're seeing the opposite, almost the cratering of emerging managers. Do you feel that's too strong language? And how has Coolwater evolved as the market's evolved?
That's a great question. I would be curious to um, basically kind of divvy up the data. What I mean by that is look at it from a fund formation perspective. Well, let me take a step back. Look at it from the active funds that are currently investing. I still think you have a lot of active funds that haven't, if they're going to transform into zombies or they're going to raise their next fund. So I still think you're there. It's like the real estate crisis where people are like, uh-oh, like, right, like you've got a 5-year cliff and like interest rates have spiked, so everyone's going to have to like sell the real estate. Still waiting for that to happen. That's supposed to happen, what, like 2 years ago? And so you kind of had this adjustment, right, in the market that allowed, I think, timelines to be extended there. And like, there's not a real estate crisis yet. There's a lot of active funds still out there, right? So looking at the market, it's like, oh, it's cratered. There's a lot of activity. Like if you're doing direct investing, you are probably seeing more active investors than ever, right? At least from my 15-year experience, like I feel like there's more VCs looking at deals than ever and more participants. If you're a member of cap tables, those cap tables are still very long. So maybe that's one kind of pushback to that, like, okay, all funds are dead, where it's like, well, someone's investing, like where are they getting their capital? And right, like those checks are clearing on day zero. The other one is like fund formation. So last year, like I said, we saw over 2,000 funds in 2024. So there's either like a delusional element there of I'm going to raise a fund, but you don't. And there is some of that where like someone comes to market too early. And I've talked about this, in kind of, prior conversations publicly where, one of the big pitfalls of certain emerging managers is kind of going to market too soon, right? The market's not ready to buy. But you can't argue that there's still a lot of fund formation going on. I think what the data seems to indicate right now, according to maybe 2 of the top data kind of providers. So maybe this is, I at least know it's true with like what PitchBook is putting out as visuals, where it's like, you've had massive fundraising success and then it's kind of like cratered. And I'm not sure what's driving that. Like you could look at the methodology behind how they're like capturing that. Maybe if it's self-reported, maybe some people are just reluctant if they raised $100 million fund to report that they raised 50 for the next fund because it looks like they've lost. Or it might be like they're capturing that and there is just like a lot less capital being deployed. There's definitely macro elements at play, right? Again, rising interest rates, the need for kind of liquidity and venture, kind of other macro factors at play that, the rise of other fund strategies like secondaries and continuation funds, right? That are kind of shorter duration and more attractive to certain LPs. There are kind of these like market shifts and these macro shifts happening that are affecting dollars deployed in early stage VC. But I am still seeing funds closing and raising. Definitely from my data, like smaller than 3 years ago, but there are still managers closing. It's harder. It's taking longer. Even as it's taking longer, there's less dollars being closed. But again, that was kind of the venture that I got involved in when I joined, 15, 16 years ago, right? It was like it took 2 or 3 years to get a fund off the ground. And I think you're seeing that in today's market. And because a lot of people kind of emerged in this up and to the right kind of bull run over 12 years ish, plus or minus, like there's kind of this like, oh, I'm entitled to it being easier. When in fact, it never was easy. It just got easier for a certain blip in time. And I think now we're kind of going through like this, relearning phase. It's healthy for the market. And again, like there's people that are deserving of it that can get those dollars. And then there's also like shifts going on, right? Which is kind of not answering the direct question, but I'll kind of comment on it where, we're working with close to 100 managers a year. Some of those managers get picked off by family offices. Some of them get picked off by tier 1 firms. Some of them merge, right? Most of them are successful, like they get to a first close, like they're able to actually like deploy capital into startups. And some of them just say like, we had a amazing kind of high net worth family office individual that came in, was writing 6-figure angel checks, great portfolio, and when I talk to people, I say like, do you really want to do this, right? Because again, like this is a long time commitment. Like if you want to do it properly, like as a job, right? Like as a fund manager, you're a fiduciary, your bosses are your LPs, right? It's like, if you want to do this, there's things that you have to do as part of the job, right? It's like, I'm going to be an Uber driver, but I don't want to drive a car. It's like, well, maybe in a couple of years that can be possible, right? But right now you kind of still have to drive the car. And so this person came through the program, and at the end of it, they were like, you know what, I just want to continue to angel invest, right? And that, if you're thinking about like KPIs or something, like that person didn't go out and raise a third party managed pool of capital, or like a managed pool of capital third party LPs. But that like so like KPI wise, that's probably a failure. But is it where like if the LPs were to give that person a lot of money and they were just like, I don't know, like my heart's not in it. I don't really want to do this job. Like, so what we're also trying to do is give people who are thinking about it background as an operator, like, non-traditional background. They're not spinning out like a tier one firm or something. Great. Come through the Coolwater program, get the perspective, right? Who else will give you like an MBA in 3 months where like, or vocational training in 3 months that kind of says like, hey, you want to be an architect? Let me cram it into 3 months for you. And you can figure out whether or not you want to be an architect. Like who else does that educationally even, right? You kind of like get this, liberal arts college. Most people get like educated that way. And you're like, okay, well, what do I actually know? Like, what do I actually want to do? And so you spent like your 20s or whatever figuring out what am I actually supposed to be, or what's my actual career path here? Where I think what we're trying to do, which is different, I think, than other organizations, is say like, hey, here's the playbook. It's crammed into a very short period of time. And, at the end of it, if you decide this isn't a path for you, that's actually an okay outcome, right? Because you're saving LP's capital that might be burned because your heart's not in it or something, your mind's not in it. And, those people are still highly skilled and qualified, and they'll still be part of like the network and still are part of the Coolwater network. But again, they just might not be, fully fit to be a fund manager, right? Or that's not what's in the cards for them.
By the numbers, you said 75 funds typically go through a year, a 3-month program. Is it safe to say you do 3 programs a year with 25 funds?
So we aim to do two, I think similar to YC, where it's like, we don't want to put a deadline on talent, but we also don't want to like just create some manufactured, like, structure that's like, yeah, let's just do 2 a year. Like, why? If there's more talent than 2, let's do 3. I think at some point you're limited based on resources and capacity, but that's more how I think about it than just saying like, yeah, I'm going to do 2. Well, I'm not going to sit around for 3 months like twiddling my thumbs, right? Because that's boring and just don't think helpful for the innovation ecosystem. But yeah, if it's 3, it's 3. If it's 2, it's 2. I think it's more like who's out there. And like, again, if you have 2,000 to start with, how many fund of funds have like 2,000 managers at the top of funnel? We talk to probably half of them, less than half, 40, 50%. Look at 2,000, but like talk to, that's a lot of conversations. And it's like a lot of people are interested and kind of want to, again, do this kind of accelerated vocational training, ecosystem training. And then another comment there is we've started expanding internationally. So we partnered with Japanese government to help launch and co-build Japanese VC firms. And I think that's a really interesting dynamic. Like you were at the event last week. There were some corporates there. There were some LPs there from that ecosystem, right? And so as we continue to expand, like we really want to do more of that interconnectivity. We think that's beneficial to the LPs, the GPs, people. I think it just makes Coolwater more interesting to kind of do that. And so, yeah, that's a big part of kind of the number of funds could go up from there, not because we're running more programs in the US, but because we're starting to expand internationally.
You said earlier that you all are unique in the sense of providing instruction for emerging managers, and I couldn't agree more. This is what makes you such a fascinating guest. You are N of one. There's not a 500 startups, a tech stars for what you're doing. You are the incubator accelerator for emerging managers. You also mentioned that you have 7 different programs. You've mentioned 2 already, one for emerging managers, I think a second one for Japanese emerging managers. Could you share the other programs that you're working on?
I can touch on a couple. So the way we kind of break out the core program now is there's like a launch track. So think of that as like the 0 to 1. And then there's kind of like the 1 to 10, like the fund 2. Do I really need to figure out how to choose my lawyer? I've already chosen the lawyer. So there might be some feedback there during the session, but it's like that's stuff you don't really want to focus on as a fund 2. You're more focused on iterating on the fund product, crafting the narrative for fund 2, getting ready to fundraise, right? So that's like 2 programs right there. They're kind of built, right? First principles of like, what does a 0 to 1 need? What does a 1 to 10 need? Another one that we used to run, which is now formalized into a fractional CFO business, is like a back office program. The feedback we got was, cool, thanks for teaching me how to build an institutional back office. I just need to like find my next LP, which, you know, if you're an emerging manager listening, that definitely resonates, right? And so, you know, there's only so much like old grandpa in the rocking chair on the wooden porch, you know, like that I can kind of get away with. And so we kind of broke that out and like ran that as a program. And at the end of the program, people were like, this is awesome, but can you just do it for me? And so we formalized that into, you know, an active service. Like that is a program we can train, but it's now more like a formal service that we can provide if you're successful in raising your funds. So, right, like you graduate the program, you're like, that was really helpful. Thank you. How do we continue to engage, right? Talked with the emerging manager earlier this morning. She has like a 25-year career in the hedge fund space, in the private market space, very capable operationally. But, you know, for the last 10 years, I've been getting more and more into investing, and now is like launching kind of an investment strategy. And so can do the work of back office, but is that the best use of time? Again, like if you're working with highly skilled, motivated, ambitious people, it's not like they're not qualified to do that, right? Even financially, like from an accounting perspective, but that's not the best use of your time. Like, what is your job as an emerging manager? To generate alpha. Is running your back office generating alpha? Some people might say, well, operational alpha is alpha, but it's like, no, it's like alpha is like returning dollars cash on cash to your LPs. And so I think, yeah, we got into this conversation where it was like, yes, you are incredible, keep doing that. But like at some point, I would encourage you to think about like, when is that transition point where you doing that work becomes actually a sink, because everyone only has 24 hours in the day, right? Even Elon. And so I think there's some of that going on where it's like, okay, there's only so many minutes. What should you be spending that marginal minute on? And so I think as you think about Coolwater, like the programs we develop are that, which is like thinking through like, okay, what needs to be built, where I don't think institutional LPs are going to build this. Like they don't have the focus. They do have the resources, but I just don't think they have the focus, or it's just like it's too small of an ecosystem relative to fund size. And so like when we think about it, we're like, okay, what do emerging managers need? Because they're such an instrumental part of the innovation ecosystem. What do they need in terms of support that if we built it, it would enable scale, right? Support at scale. Another program, this is the last one I'll touch on because I'm going too long with this answer, is like the LP training program. So this is kind of interesting, right? Because it's starting to gain some traction, but you'd be surprised at how many fund of funds call me to set up their fund of funds. Because I've set up a fund of funds before from scratch, right? Actually multiple. And so I have that skill set, and I kind of enjoy those conversations, to be honest. So if there's people, family offices, other fund of funds that are kind of thinking about setting up, like I'm happy to kind of help you think through that process. But again, like I get bored very easily. And I'm not a very interesting person. I work very long hours. And so for me, it's like when I'm twiddling my thumbs at 8 p.m., I'm like, I've got 4 or 5 more hours of work time. What am I going to do with my life? So, I could either write a third book, or I can build another, or like iterate on another program. And like you kind of run those programs, and there's like, like if you've written a book or you've built something before, it's an iterative process. It's not like, oh, I'm going to build a house and let me start with the roof, right? It's like, no, you start with the foundation. I have obviously like permitting and blah, blah, blah. But like, you kind of start and then you build, and then right. It's the same thing with these programs where it's like, there's kind of what's the gap in the market, okay, LPs, they want to invest into the space, but they don't even know where to start. I've had big family offices call me and they're like, I'm afraid to invest in the VCs because I don't know what questions to ask for reference calls. And I don't want to look like, a buffoon. And I'm like, seriously? Like, just loop me in on that conversation, right? It's like Chat GPT, like, what are 5 questions I should ask, like on, reference calls? So hopefully that's gotten easier with Gen AI. But I think like, over the last few years, I've been surprised at like why some people are like LPs are afraid to like access this space. They don't know how things work. They don't know how to underwrite funds. They don't know how to assess risks properly. They don't know necessarily what the structure should be. They don't, right? Like you do something and you're like, okay, like if I start going down this path, is it a 100-mile walk or is it like a 2-mile loop, right? And so they're not sure which. And there's like a 2-mile loop, like sure, like yeah, why not? But if it's a 100-mile dead end, right, that is straight up a mountain, it's like, well, there's no mountain that probably goes up 100 miles. But that aside, you're on a ridge line for a while. That aside, like you kind of get the point. It's like they want to kind of know the full picture if they're going to get involved. And so, yeah, it's like that kind of turned into a program over time where now it's like we're talking to a number of governments to actually like help the local ecosystems understand how to invest more into their innovation ecosystems. That's very important. It's very important for you at Context. It's very important for other emerging managers. And that's, again, like that's what we want to stand for. It's like help the GPs, but also help the LPs access the GPs. And that can be an institution. That can be a family office. That can be a high net worth. That can be other fund of funds. Like a big mission for Coolwater is trying to bring more of that capital into the emerging manager space. Like small funds need that, right? And again, like the way we do it is we develop these programs. Why? Because they're systematic and scalable, right? So people are like, well, how do you find time for that? Well, you have to do things that aren't scalable to start, but once you build it, right, it's very interchangeable.
Love how you are supporting the innovation ecosystem and the ones that are the most scrappy, the emerging managers. You have seen many emerging managers through Coolwater and before. I'm curious, what are traits of the most successful funds that and emerging managers that you come across? What do they do better than the others?
Some people would say like, who you're going to marry in like the first 5 minutes of a conversation, right? Um, does it always turn out that way? Maybe not. But I think if you've done enough, right, iterations of something, you kind of have a sense, like there's a gut sense. And so I think there's a difference between like the gut sense, right, shooting from the hip, which, you can be very good at that, with enough practice. But I think what you really want to do is have an informed perspective married to like a gut reaction, right? And so it's like the difference between like a reaction and a response. Like a reaction's like, wow, oh my, like where do I sign? Like here's the blank check, actually, like you just fill it out. And a response is like, let me thoughtfully think through why I'm doing this. Let me assess the risks. Okay, I'm getting to a decision. I've made that decision, and you allocate the capital.
We call that when we invest in startups, our system one versus system two reaction, right? The Kahneman Tversky, like system one, we love them, but it also has to pass the system two rigorous thinking.
Yeah, and so I think the question of like, so how do you figure out like who has the best traits over time? So I think some of them, like what we do with the accelerator to kind of put into context is everyone that has like a gut reaction, like positive, it's like invite them into the accelerator. But then things over time, like, right, like if you, like, let's just go back to the 100-mile running race. Like if you say, tell someone to like walk or run 100 miles, like over the course of that race, there's going to be dispersion. And so in the beginning, like let's say everyone sprints off the line, they're all going to look fast, right? You're going to have sprinters that aren't long distance runners. You're going to have like, slow twitch muscle fiber people that are kind of, slower than the sprinters, and they're going to look like they're in last place. But over time, right? So I think what we've built is the ability to kind of assess and build relationships with people over time. But it's like, I think you have that gut reaction, and like that's driven off of charisma, right? Just intellectual horsepower, There's definitely some like performance there. Have you built a good company? What did you do with that company? What type of company was it relative to your strategy? Are you a former investor? Can you talk knowledgeably about investing? Do you understand what the role is? But it's like, I think we're looking more for something that's like an X factor that they can turn into a franchise. And so it's like, let's bet on that every day of the week. But then I think where you start to get the dispersion is just like, it's hard to measure ambition up front from a single conversation because quiet people can be ambitious. Loud people cannot be ambitious, right? And so it's like, great, you have charisma, but that's different than like ambition. I think, love for the game, like you can't fully tease that out in kind of a first conversation, but you can see it in performance, right? Oh, that person shows up early to practice, they stay late, they put in the extra time, they put in the extra shots, they get the extra gym time in, blah, blah, blah. Like it's those things you can't see in a first meeting that you see by, right, spending a season with someone. So I think you start to like see these traits. And then I think it's like sticking to the actual strategy. So some people go out premature. It's okay to evolve, but I think some people like they go out for institutional like prematurely, where they should be like iterating with their own money or with a small kind of proof of concept fund, figuring out what the strategy is, and then look to scale. I think very few people are like go big or go home, right? Or, I'm just going to like posture my way into kind of success, where that's not my style. I mean, it's like, I guess, whatever floats your boat. But I do think there's like some element of the people that are successful have kind of like already iterated and failed a lot. And now they're coming to market with like a very like best in class strategy for their own skill set and expertise. Right. So, and you can tease that out very quickly with like how they actually access the founders, how deep their network is in that particular space, how their portfolio starts to trend in the early days. And then I think there's kind of like, there's a love for the game, but there's also like, do you even understand what game you're playing? Right. And I think like there's this element of expertise with like how you play the venture game. Venture is very different than other asset classes. And so this is like a very venture specific comment, but I think some of the best people, they love it, right? Like if you didn't pay them, they'd still do this, right? But I think there's also the element of like knowing how to like manufacture kind of the early days so that you're set up for faster success. I think recently too, like another element of success is like you built a brand. This isn't necessarily like a public brand. I think like the kind of public narrative around media and VCs, like you need like this public brand to be successful. And like you're seeing some chess pieces moving around with that. I think you just need a brand like that's consistent over time, right? It's like if you're doing this over here and that over there, and this, it's like I feel like the most successful people are almost slightly boring, right? That's not meant to offend anyone. That's like a compliment where it's like you can actually stay focused, even if you're like whatever the designation is, acronym is, like where you can't focus, like, it's like fine, like you're responding to 300 emails and doing 10 different things in a day. But like, if you look at the pattern over a year, you're like, that's pretty consistent, right? Every VC likes to kind of claim they have some type of like acronym, but it's like they don't, because like you look at them and you're like, this is all you do. Like you are actually one of the most focused people on earth. And I think that over time adds up to success. And you don't see it over the first day, the first week, the first month, the first year, but you do like the first fund, you start to see signs of it. The first two funds, right? And I think that's what probably institutional LPs have figured out. I think at Coolwater, we can figure it out sooner because we engage so much more intensively than a traditional like institutional LP. But we kind of are like figuring this out at fund one and fund two, where it takes like 5 or 7 years to really become like known to the market. But if you know, right? Like if you ask around, like there's always like, and I think brands kind of and perceptions kind of go in and out. But if you're consistent, right, someone might kind of, dock you points one day, or there might be a negative reference here or there. But like if you're consistent over time and your values are in the right place and your intentions are in the right place, right, even if you have like a down day or a missed shot, over time, like you have a higher chance of success. And so I've just seen, yeah, like again, the ambition, the love for the game, just like this is the only thing you can do, consistency over time. Like these are very like probably straightforward things to say out loud, but it's much harder to actually action off of day to day. Um, and I think, yeah, I mean, that's kind of what we look for. And even if you have all those things, you've done everything right, all your intentions are in the right place, you're the smartest individual, like venture is weird. Like you still might get unlucky and you just didn't get that power law effect, right? Like you didn't get that one escape velocity deal. And, therefore like the LPs get skittish and you don't raise the next fund and it becomes like you kind of plateau. So again, it's like you're kind of training for the Olympics and all of a sudden like you break your leg or something. And that's the setback that makes you never make the Olympics. It's the same thing here where I think you can do everything right. You've trained your whole life to be in like the right place. And then all of a sudden, right, like you don't get that power law effect. And that does happen. It's unfortunate, which is also why I think like we're trying to support at scale, because we don't want to support 5 managers and then realize that they just got unlucky, because venture's kind of weird, right? Like diversification is important in venture.
Your book, How to Raise a Venture Capital Fund, was a book that I picked up when I was raising a fund. You've since published a second book, How to Set Up a Venture Capital Fund. Can you talk about the two books and how they complement each other?
Yeah, so it's funny. They're meant to be written in that order. How to raise a venture capital fund, how to set up a venture capital fund. I used to think they should be in the other order, how to set up a venture capital fund and then how to raise a venture capital fund. But for anyone listening that hasn't gone through the journey yet, I would argue or encourage you to think through why they're written in that order. You want to raise the fund before you set it up. Now, don't just say like, oh, Winter said, I just need to like raise money and there's nothing else I need to like implement. It's having product market fit for your fund product is so important. That's what you're iterating on in the early days, right? And kind of understanding what are you even doing here? Like, how do all the pieces fit together? Like, why should you even exist? Are you the right person to run the fund? What does running a fund even look like? What are you signing up for? What is this job? Who are the stakeholders? Who are the players? How do you have to exist and persist over time? Like, what do you need to manage? That's kind of the first fund. It's like really helping you like how to raise the venture capital fund. Like, what does it mean to raise the fund? And what are the pieces that you have to put in place? What are your marketing materials, right? Whether you're raising from a high net worth or an institution, there's a package you need to put together. So this book kind of helps you understand that package. And I've tried to make it very accessible and almost rudimentary so that it's like easy to digest if this is your first time digesting it. The second book, How to Set Up a Venture Capital Fund. This is kind of, again, like I said, we run a fractional CFO business now. That's a service we provide to sub $200 million funds to build and run their entire back office as the CFO. And so this book was meant to be, again, an accessible version of just understanding very quickly what are the pieces and potentially the teams that you have to put in place when you're launching this type of company. If you're going to launch a restaurant, right, you can figure it out, right? You go, oh, stubbed my toe there, forgot to put up the no smoking sign there. Oops, didn't put in a bathroom. People are going to want to go to the restroom when like they're here. I should have put on like 3 stoves instead of 1 because of, the foot traffic here was that. And so I didn't like properly evaluate the data and right. Oh, I should have hired a sous chef instead of just like a single chef. And now I'm like underwater and I hired the wrong team. So there's these pieces you need to put in place, like whatever you're building. Like in this case, like I think a restaurant is accessible enough to most people where it's like, oh yeah, there's these, like, it's already been built a million times over. Why reinvent the wheel? Understand what needs to be built and what the team is that needs to kind of manage that at a high level. Of course, there's always going to be nuances and changes based on your own strategy and idiosyncrasies. But I think the second book, How to Set Up a Venture Capital Fund, was written because of that. It was just like, here's a bunch of stuff. It's like really straightforward. Just understand what the big picture is, what could be coming down the lane. And then again, the takeaway is you don't need to set up everything institutionally from day one. I think, in one of our conversations before this call, it was like, is institutional even important, right? Like, who cares? Is that the most important thing? And it's like, it's not. Good business practices are important, right? There's certain ways of setting up a restaurant that probably have been like tried, failed, tried again, and succeeded over time, where it's like, right, like the wheel, it's helpful that it's round, right? It's like, do we need to regress? And so I think the same thing here, where it's like the investment firm's already been invented before. There's, again, going to be some idiosyncrasies depending on your strategy, where you are jurisdictionally, structurally. Like, there's things that are going to change how you want to run your team, like what's advantageous to you delivering alpha. But for the most part, 90% of that's probably going to be pretty similar. So again, like, it's just like a one-to-many opportunity for me to share like a perspective. People can quickly read it in a couple hours or less and kind of say like, okay, I feel comfortable now, right? Like, when I get into a new space, I try to read like 5 or 7 books on it, because I don't trust the first book. It's not that I don't trust it. It's like I want other perspectives. And I think I would encourage the same thing here, where my books are boring, but great, because they're very straightforward, and it's almost like a guidebook, like to get you set up. I think it's less of a story and more of like, hey, I want to launch this and figure out just like, what does the full scope look like? Great. Grab my book. It's not going to tell you like a story per se. Maybe the next book will, but I think it's really meant to be like, I'm nervous. I don't have the full confidence yet. What's the big picture here? I need the 20,000 foot view, so that I can then like cherry pick the closer to the ground views. That's what it's meant. That's what the books were meant to do. And then again, like, our courses are much more in depth, much more nuanced, much more focused on helping you specifically. And these are more just like, okay, I want to launch, right? How do I quickly get off the ground here?
We've been talking about the future of venture capital, especially emerging managers. Let's quickly chat about the future of Coolwater. And so, in the initial call, I joked or assumed that maybe in the future you all will become a fund of funds or OCIO. But from your perspective, what's how do you see the future of Coolwater?
Yeah, so we have the accelerator. As mentioned, we're continuing to run that in the US. We've started expanding internationally. We want to continue to expand, and hopefully we have a couple more exciting announcements by the end of the year. So stay tuned. We are investing into this ecosystem. Our intention is to scale that up over time, right? And again, I think you mentioned kind of fund of funds versus OCIO. Again, it's good to stay focused, but it's also good to stay flexible. So our mission is to bring more capital into the emerging manager space. Structurally, I can be more agnostic to how that's done. At the moment, we're raising fund of funds and investing into this ecosystem. But yeah, like, we could be more flexible over time. I think we have a very unique perspective. We have a lot of great relationships with managers that are going to be the next generation and the next generation after that. We have a very unique model, right? So there's, a 1 minute, learning curve for understanding like where this unique accelerator platform plus fund of funds, but we would like to scale that up. And I think, like I said earlier, I've spent time kind of coaching people. And again, I think where we're starting to shift is trying to find more institutions that want to access this space, and we can be the representative for them or the partner with them to help them access this space. And that, again, like, that's beneficial for the innovation economy. That's beneficial for diversity of emerging managers. That's beneficial for emerging managers generally. Like, that's, I think, a good investment opportunity, because the last couple decades of research have pointed to small funds outperforming. All these things point to like, you should be investing into the space. And the market dynamics, you have the big bifurcation between like small funds and big platforms. You can still access the big platforms if you want. I am hearing a number of LPs actually starting to leave, sophisticated LPs starting to leave the big platforms. And I think it's like, okay, well, how do you now figure out this brave new world of emerging managers, where there's, again, hundreds of new launches per year, if not low thousands? How do you figure that out if you're staffed as a small team to, right, 2 to 5 people to access all of private equity and venture capital. I think that's like, you hopefully can work with someone like Coolwater that can help you one to many, like one-to-one relationship with the institution to many of these relationships with the managers. And again, I think we want to continue to serve as the landing pad for talented, ambitious investors that are going to represent the future of our industry.
Speaking of the future of the industry and limited partners, my understanding is you co-founded OpenLP. Is that the case? And can you talk about OpenLP?
We developed that when I was at SAP. Sapphire Ventures, SAP Ventures and Sapphire Ventures. Now it's Sapphire Partners. So that's the fund of funds of SAP, Sapphire Ventures platform. And we were trying to build a brand that wasn't fully associated with Sapphire, that was helpful to managers. And by doing so, our own brand would be elevated and like we'd have more inbound. The intention behind that was to be an aggregator of content. It was so hard. It was like Chris Duvos writing some good stuff. I think we were writing some interesting stuff. You can name all the people blogging about LP stuff on like one hand. And this was 10 years ago and no other fund of funds was doing it. And so we said, hey, let's like work with like a PR firm at the time. So we worked with VSC, sat around a table and kind of discussed, okay, we're going to do this initiative. Like, what should the name be? I think I said LP to G, LP, GP, LP or something, because we like wanted it to be kind of this conversation between like LPs and GPs. And the founder of VSC was just like, let's just do hashtag OpenLP. And everyone's like, yeah, all right, pens down, like that's it. And so, yeah, we ended up launching that as this like hashtag aggregator, where if like, hey, you're anyone in the ecosystem, here's this like agnostic thing, OpenLP, that you should just hashtag it. And like all, like if you were becoming a new manager, it would help you. It was like an educational thing. I think where I kind of doubled down with Coolwater was saying like, okay, education is still good, right? Like if you understand what Coolwater is, it's largely educational, but its implementation has to happen too. And this kind of like one-on-one, like you need this kind of bespoke help as well. Because like if you just read something, if you just read 5 books on how to build a house, can you build the house, right? Like you kind of need peer networks and you need community and you need implementation help and coaching. There's these other elements. So I felt like LP was like OpenLP was like a very great start and aggregator of content. And it still serves as a great initiative for helping people understand this nebulous space of LPs and GPs. But again, you know, Coolwater is different in that it more focuses on like, okay, there's learn, but there's also do, right? If you just go to college and you never have a job, that's fine. But like, I think again, for people that are, you know, yearning to build something, like they have to do this. That's kind of where we fit in with Coolwater. It's like, great, you know, OpenLP still serves its role as like educating and aggregating. I think Coolwater said like, how do we keep trying to push the boundaries with like, you know, doing, and as you mentioned, kind of the future of capital allocating as well.
We're going to move into rapid fire questions to close this out. Some of it's industry related, some of it's non-industry related. Favorite books besides your own too?
Like I said, I kind of read, do I have to answer this honestly? The Bible's pretty interesting. I tend to read and reread that as like a history book. I think I was thinking about doing some work in Eurasia. So I've read a few books on kind of Eurasia and like the history of Kazakhstan and its like associations with the Soviet Empire recently. I read a lot of business books. So if I'm trying to understand something, like I got into a kick with real estate, as you can tell by all the house analogies. I've read like 20 books trying to figure out just that as an asset class, right? It's almost like if you think of yourself as like a chief investment officer or CIO, like what do you have to, how do you have to understand like the fundamentals of a certain asset class to really understand like how money is made? And I think I tend to read like that. I'm like, okay, that's a geography. How do I understand it really well? Or that's a asset class. Like, how do I understand that really well? Like, how does money actually, like, what are the return drivers? Has money actually made there? That's usually how I pick books to read.
Favorite movies? The vibe I've gotten from you is you are a very serious and methodical person. I hope for movies you choose something more science fiction and fictional.
Yeah, I don't. I don't watch a ton of movies. It's more it's probably like Lord of the Rings. I'll watch like rom-coms with my wife. Um, I've tried to use like chat GPT to like make me more smart on like which are like the highest rated movies that I can entertain myself on a Friday night with.
How about favorite travel spots?
Uh, all over the U.S. West. Like I said, we started doing work in Japan. Just think it's the food there is incredible, and kind of the ties with Japan and Italy. I didn't even realize like the craftsmanship that exists in Japan, and then the same with like Italy. Love going there. Um, and then just like yeah, other places kind of ad hoc. A lot of places in Latin America. Gone to the Middle East a couple times in the last few years. That's been interesting.
Favorite junk food snacks?
Probably just ice cream, pistachio,
Nice.
gelato. Like gelato's a little bit less fatty, but so you want to splurge on ice cream, and then like if it's a daily routine, do gelato.
Favorite LPs creating content? You mentioned Chris Duvos, Beezer, but anyone else that you think is worth following or reading?
Yeah, I think Cup of Joe, right? Like David, I think he's putting out some pretty interesting stuff. There's I think a lot of podcasts. Samir over at Allocate, right? Like he's doing some good stuff. The Notation podcast, I think, is still putting Nick Churls putting points on the board. Um, yeah, I could probably think of others, but off the top of my head, I think those are some good ones.
2020, let's fast forward to 2030. Will that be a great time for emerging managers or a difficult time or same as what it is now?
I think it's going to be a great time. Like I think the heuristic I've always held in my head, like over the last 10 years, let's call it, is like emerging managers are great because they're always emerging. I am starting to see a lot of emphasis on like tech. Like I know it's boring, like operations and finance, back end, like shut up winter, but there is like a lot of like restructuring of the tech stack and how like AI is kind of redefining all parts of the investment firm build. So yeah, I think 2030 looks a lot different 5 years from now. I think the smart managers are starting to implement that now, like into their processes. They're starting to turn into super investors. And yeah, I think the world will look very different. There will definitely be emerging managers. I think the world will look very different in terms of like the technology and the data they're able to access to make investment decisions faster.
Final question that combines what you just said, and that is Mark Andreessen recently famously said, a venture will be the last thing that AI disrupts, but you kind of gave a hint that AI will change it. What's your thoughts on that?
It's like driving cars. Like, do we have the technology? Yes. Like self-driving cars. Um, is it going to like be implemented societally yet? Probably not, right? Because there's just other hoops you have to jump through. So we've brought in some like AI first funds through recent cohorts. The feedback from the institutions is like, I would never allocate capital into that strategy, right? And it's like, okay, even if it's not a black box, right? It's like AI, you need to have like an audit trail, and like that's what's going to be used in enterprise. I think it's the same thing here, where it's like you're not going to give money to someone, right? Like, and just say you might like run into like some of the biggest, I think, hubris episodes in the last couple decades, right? Long-term capital management, like some of these other like big hedge fund downfalls. They're like, hey, we're data, we're all like we're quant, we're processing all this stuff, like we're the smartest people in the room. You might be, and then like all of a sudden you miss something, and like your stock goes to zero. I think there's some fear there. There's a lot of skepticism, and so I think like you're probably going to see it uh, adopted at like you're already seeing it adopted at the sourcing level, at the HR level, like helping like place people into companies. um, you're using it at like the investment memo level. Like Gen AI is like very helpful for that. I'd say a couple of things I'm sent every week now. I can just tell like the memos are like fully Gen AI oriented. There's some hallucinations there, right? So it's like, okay, you just comped this company with itself, right? Like that's a hallucination. It's like, and the data's wrong here, right? Like if you didn't read and reread. So there's I think facilitation using that stuff. And then there's like the double checking and how does that change your process, like your normal process. The decision making, right? I think that's ultimately like, why do you need financial advisors? Probably not. Does it make you feel comfortable having a financial advisor kind of overlooking your money? Yeah, it does, right? And that's why like that job probably could have gone out of business decades ago, but it doesn't, right? Like, do you need a car salesman to sell you a car, right? You can buy a Tesla online, right? So the answer is no, but it does make people feel comfortable, right? So I think it's that human element. Maybe that's what he's getting towards, where I don't think that goes away, especially if it's like something as important as like your capital being locked up. I don't think you want to put that into a black box that's not audited. I think you want kind of someone as well, to the same point of like, if AI runs over 4 people instead of 20, right? Like, what's the moral dilemma there? It's the same thing happening where it's like, who's to blame if you just like put all your money into an AI that like invests it all in an optimal way based on some algorithm into like the top companies based on whatever predefined like metrics. I just don't think that's how it works. And the other piece is like capital moves from my perspective based on like relationships. And so I've had this conversation with some big institutions recently where some of them are kind of very entertaining, where it's like they have all the data in the world, but they might not have the access, right? If you're talking early stage VC, where it's like, cool, like I'm the top engineer and CTO, I'm starting the most awesome company, I'm the biggest like financial firm, I've got all the data. Oh yeah, I want to invest in that person. That person's like, okay, that's nice. Tim's the man though, like he's been helping me for 10 years, so I'm gonna give him access and you can wait, right, and come in like future rounds. So maybe there's an element like, how's AI going to solve that? Again, it can augment and create like the super investor, but it doesn't replace, I think, the relationship. So the difference between data and access slash relationship is still very strong in venture. And I think that's something that's like, okay, how's AI gonna like take over the relationship? That'll be interesting. Maybe that's next generation robots.
Winter, this has been a fun and fascinating conversation. Great job on the event last week. Thank you for what you do for emerging managers. Thank you for the literature and the education you've been providing emerging managers. And this has been a fun episode, and wishing you and the Coolwater team the very best.
Same. We'll be in touch. Thanks, Tim.
Yes, sir. Thank you. Goodbye.
Bye.